Good early morning, peoples. Bruce with Targeted Wealth Creation back at you for Pulte. Remember, I did Coney before because we had some good activity. Mostly flat in Pulte, although, you remember the Pulte story, guys. We had $10 worth of synthetic profit per share collected, but we collected it, we rolled it on Monday, 6/16 after the week ending on Friday of 6/16 or 6/13. So it didn't count, again, accounting. So they paid us 326. So you would have gotten that on Friday, or was it Monday because of the week? I think we got it on Friday. But bottom line, we've been paid for that. Maybe it was Monday because of the holiday on Juneteenth, right? On 19th. So bottom line is having to have all the accounting data back to say, okay, they paid us 326, but we had like $10. So I'm saying, hey, it's too early to determine or estimate. So I've got, hey, we should have a $6 payment. And if we do well this month, maybe we get up and we have an $8 payout. Remember, this is in the 60s. So let's go take a look at the data. Whoops, I want to look right here. So we've got 23 days till declaration, a long time, right? The IVs dropped a little, 47.90. We were up around 56 in the IV. And this is kind of what was going on. Now, we did have maybe 7 million in loss. I think that was the number on our weeklies. But this is the kind of money that we were throwing out. Okay, this happened, this $11.51. This is kind of a moving target. So let's go take a look at where we are currently. So they have since rolled into a 140, and the 115s closed at 116 and 3. So there was about 119 million minus some cost, but not a huge amount. And then this open one is showing a profit here on the close of Tuesday on the 24th. It is showing a profit of 15.6 million. But again, this is paper profit. This isn't. This is realized gain. But unfortunately, it didn't contribute to the June payment. We're looking in the July. So that next accounting period finishes on 7/18, right? You just go from it stopped here, one, two, whoops, is that right? No, it must be 7/11. Sorry, guys, I just when different groups come into play. So if that was the case that we declared over here, this was the accounting date, but we actually sold here, then it's just 4 periods. That's why when you calculate yield on cost, you give it 13 months because they go literally every 4 weeks in these groups. So you end up with 13 monthly payments. So a particular month, depending on the group, has two payments, like a May 2nd and a May 30th. Is one of the groups had that for its paydays. All right. So, having said that, we're up to about 10,100. We actually went down for Monday about 75,000 shares. Not much when you look at a percentage change, like minus 0.74. I could even make that red here. So, I try to make this red as well. That's the main one. I want you to, with my arrow, I'm not going to change the color, but I'll point it down instead of up. And I also track that up here. So it was 10,175 on Monday. All right, guys. So the other relevant stuff, how do we look going into this week? Well, we got 3 trading days, right? We've got the new group. You're going to see actuals, payouts early, so I'll have a video on that for you guys on Group C. That's the Coney payout and Coney and Friends in Group C. You always have a bunch of weeklies, and then you have the other um, companies that are in that group. So I think if you saw my other video, I'm very close to having my daily reporting activity on, I'll include Misty, I'll include SMCY, I will include GDXY, and probably one or two others. And I may just phase in like two at a time and do them in groups like that. But the net effect is I'll have all of the details on all of these funds, eight or so that I'm going to cover. I'm not going to do one big long video on it. I don't like that method. Some people want to do it that way. It's not mine. Um, so let's look at what our setup. I mean, you don't care about cash. You do care about this, what's open and what's the paper value. But let's look at the setup for this week's because this rest of the 3 weeks is going to determine a lot on how we do, right? And this tells us this is the barometer along the way. That's why I build it out like this. So we're already, remember where we are. I put it in a couple 143.23. So when we sell a 141, we're already $2, right? So this isn't bad. This theta is only less than $2 of additional theta or gamma, I think is no, I think it's theta, which is the premium left, the time premium portion. When you get into the Greeks, guys, you got to write them down on a list and talk to them. And I understand what they are, but I don't always get the right name because I really don't use them. I mean, you'd have to be an options geek working every day in that field to dialogue with another options geek, right? Or Greek. No pun intended, geek, Greek. Okay. So you get what's going on. And the higher the IV, the higher the premium in that remaining time. So that one is not particularly bad. The fact that it's showing the close on Tuesday at 3.9 and look, on 143, $2.23 of the $3.90 is actually above, right, in the money. And look, we got a 142. So that guy's like $1.23 in there. So it's got $3 of theta or $3 of time premium left, which will decay every day we go. So, um, and we're actually in the money on this guy. So the setup isn't good. They haven't had any intraday trades for 2 days now. Monday or Tuesday, there were no Pulte trades. So they must be confident. Well, I'm going to show you the chart in a little bit. I'm not so sure that this thing doesn't break out and run like what Coney is doing. Um, Coney for different reasons. Right now, there's legislation on the stable coins, and they had a little bit earlier the S&P. Pulte's already had that S&P bump and some of those kinds of things in its case, but it just outperforms because it sells a hell of a lot of its software, and it's expensive. And when people buy it, they just get you can't live without it. It's very, very effective software. As I said, I think it's the best software company on the planet, bar none. And I'd say Snowy is a light version for smaller companies that don't want to spend, you know, 100 or 500 million on deploying Pulte across all of the, you start getting into the army and the government, or you start to get in a hospital or, a huge hospital chain and, 20 states with, 150 hospital, then you're talking about logistical operational kind of use. Um, how many doctors, how many surgical rooms, how many nurses, how much medicine, et cetera, et cetera. So that's the logistical nature of their software. You can basically program it to tell you and do just about anything related to logistics. All right, so on these guys, to me that's a little dangerous, right? But maybe it just flutters around this week. Then we have a 145. That's $2 underneath, or not, a dollar 70 underneath. Yeah, dollar 67 to be exact. So all is in reach of going, and part of the problem is they've got a $7 spread. So we could go, the worst thing that could happen, the absolute worst is, and remember, you do gain on the synthetic, but let's say Pulte ends the week at 148. Well, this 16 million loss that we're showing over here on paper, at 148, that goes to probably a 30 million loss, an actualized. Right now, this has got premium, but by the time you go to 148, this guy's got $7, right? Because 148, $7 over. So you're buying this thing for 715, 720 to close. So that is the worst situation. It gets to 148 and you don't make a penny here. All these are worthless. So your little 301,000 becomes whatever you paid, and this is what you paid, 2.6. So you paid, about 2,800,000. So you lose that. That insurance didn't come into play because it would have to get to 149 for this guy to be worth a dollar. And so that's how these spreads work. They say, oh, well, it helps. As I said to you guys, it's probably a 5 or 10. It's the difference between on the upside only capturing a third of the upside to maybe getting to the half of the upside. But only when your spreads are tight enough that when it runs well by these that you pick up and go. But remember, if they would have a tight $4 spread, the 141 was 145 down here, the 142 was 146, then they're going to pay more. So it's like you're paying more for the insurance. But here's one of the things that they can do that I don't see them doing, and maybe with these being so close in the money, is they can sell a higher amount here, like 48,057. But in this case, they have the same amount down here. And I don't blame them. So they're 3, 4, 4, and 6% out of the money. These guys are in the money, barely in the money, and out of the money 1.24%. So this is a setup. Like I said, the very worst thing would be a move to 148, but on just the spreads. So you're going to lose about $30 million here. Well, where are you going to be when this moves? This is where I like to educate you guys. Where are we going to be on the open? Okay, if we move to 148, this right now at 143 has $5 premium. So it's still going to have about a $4 premium. So let me do a save, and then I just won't save what I'm going to add. So if it goes to 148, this is 8 plus 5. So this guy becomes about $13. And remember, we had a $15 million gain. What does this guy become at that? He shrinks, we'll call it 310. So you just went from, what did I say, 16 million, something like that, to 47. So you gained about 32, 33 on the synthetic, but you lost about 30 million on the spreads. So that's what happens at when the spread hits its worst, right? Right at before it's going to start making money. It has to get to over 148. So when it gets to 148, you do better. Actually, I think I can just reverse them like that. Yeah, 15. So that's an exercise, guys, to teach you a little bit of the movement. I didn't expect you to become an options guru. I just, want to show you how the movement affects these things. So the one thing that a lot of people talk about is they have no leverage beyond the synthetic, which is a lot of leverage. It's 100% long the synthetic. That's why the spread, you can always equal the spread, but that's not a gain, right? Not when you make 32 and the spread loses 29, then you made a net 3 million. But man, just being long that and not even playing the spreads, you would have done better. So that's why they used to have these covered spreads. They call them covered, but they were covered in the sense they wrote a naked call. It's just they were long on the synthetic, so they call them covered calls. But you really lost when you run by it, right? Look at Coney in my video. You ran by it at 12.1% gain in a single day. So you blew by it, but you gained a little bit on the spread. But the synthetic, you know, helps, always helps. But what these other funds are starting to do, and they're pressuring Yieldmax to do that. Your round hills on the weekly, they're using 120% leverage. Well, you can only get that kind of leverage by utilizing swaps. It's the easy way to do it. And then some of them are saying, well, we're only going to sell calls on half. So they're not going to have as big payout as much as Yieldmax, but on the big ups, they're going to capture more NAV. They're going to really fly up, and they're going to have a good yield. They're just, not always going to have the same yield. But, as I said to you guys, my story. Yield is not the full measurement. Total return. You add your yield gain and your loss or gain on the NAV side. And you guys know it well. You guys that know when to buy on these charts and say, no, I'm waiting for Plty to pull back to 50 again. You have to do that kind of stuff. Otherwise, if you set it and forget it, Plty, I love it. I think in 5 years, Plty will do just fine, or Palantir will do just fine. So Plty is going to pay you income and not have reverse splits and go down to nothing and deal with all of that kind of baggage. But you can do better if you pick your times in these income funds. But once you understand how they work, that helps too. All right, guys, I'm not going to belabor it. I was able to, with doing these single videos, talk about it a little longer than I normally would. Oh, let me show you the chart. So I did update the chart. And kind of like Coney, remember I said here, we could be forming this cup with a handle, right? And some people call it an inverse head and shoulders, where you have a bottom and this is your shoulder, left shoulder and right shoulder. But when it's such a rounded period, instead of like a V where the head's down here and the two shoulders, then it's often referred to as a cup with a handle. So this came down, it went up, it came back, and it looks exactly like it's forming a handle. Well, where does that project? So when you go down here and you take this around, 72 or something, and you take this up here at 125, you get like 53. Well, you always want to measure the bottom and draw a line up on the top, and the distance between these tells you typically the minimum gain if this pattern plays out. Again, if it comes down here and goes down below 90, then the pattern's not valid, right? The probabilities come into play. So let's go look at what I posted today. So we continue to play here as long as we stay up here above this neckline, which is around 125, and we don't come down below and stay below it, then we're fulfilling this pattern. So that cup and handle pattern measures to about 177. And nothing ever surprises me on Plty because, and yet the market, if the market itself tanks, then it's going to take Plty down. But Plty has the ability to report earnings, to do other things, to just keep everything going. And I feel sorry for everybody that just looks at their PE constantly and says, oh, I can't touch it. The PE is just crazy high. No, what you should say is, I want to own this thing because this company's software is just crazy good. And some people just have to have it. So sometimes you can win on that versus looking at an income fund. To me, and you guys have heard me, when I look at a Carvana or I look at Hoy, right, on Robinhood, and Carvana. I don't see the intellectual property. I don't see. I just got to have that, right? Can I go to Schwab? Can I go to Fidelity? Can I go to iBroker? I don't even keep up with all the companies. I have three different companies. I just named the three different companies that I have accounts with. But I don't have it with Robinhood. But I get it. A lot of young guys go in and use their mobile phones, and Europe has some equivalent. So I get that it's trending. But to me, I don't see an IP that they have that somebody can't just come in there and compete or drop their margin or do something. So while it's a good company and it may be a FOMO stock, is it a 5 or 10 year where it's going to go up 15 or 20 times? In my opinion, no. But there's nothing wrong with while it's hot, and I'm thinking about covering both of those. I'll probably do CVNY first, but I'll probably cover it because it's fun. It's exciting when they do big payouts. But again, don't chase yield. Know what you own and be bullish. And it pulls back, be comfortable that it's going to go higher. That's how I invest. Always have. And I've learned the hard way. One of the worst things I ever did was get involved in a little penny stock sometime and start believing in the story, right? You get lied to, you get cheated. They had good tech, but this didn't happen, and the CEO's a crook, or the CFO stole money. I mean, there's always something that can happen, but in the big companies, it's more rare. I get it with what was it, Enron, that happened to. It was a pretty substantial company, so anything can happen. All right, guys, this is Bruce with Targeted Wealth Creation, always looking to give you a twist or turn on something I think matters. I've learned it the hard way, so I might as well teach you guys. All right, this is not financial advice. I'm not a financial advisor. Always seek advice from a financial advisor before making financial decisions. Bye for now, guys.